From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB.
Yeah, it is, what's the date? The 16th of July. I was reading something. I was actually reading about Drone Shield. So we'll talk about that a little bit later on. But nice to have you here with us.
Absolutely. On a day when our guest just said not much happened, but we will take those gains when we can. I mean, a little bit of a retreat, I guess, from those records that we saw.
It's always where you've come from, right? So if we take a look at the CIBO Australia Index, trade is done and dusted when it comes to that market, off by about 1/4%, pretty choppy through the afternoon, but looks like it's closed off the lows of the day, but not by much. But if you think about the S&P ASX 200, Jules, you know, still above that 8,000 level. So we'll see what happens when the last of the day's trades go through.
I can't believe I missed that day yesterday when we hit 8,000. But as you say, we're still sitting there 16 points lower as we match off. A bit of a reversal from Rio, and in fact, you saw a little bit of a reversal from those key miners today, which did weigh on the overall market. Coming through with its quarterly update, also that really interesting $9.2 billion spend in Guinea, also given the green light by Chinese authorities.
We are in quarterly production season, if you'd like to call it that. So yeah, we'll continue to keep our eye on these miners, and of course a lot of still consternation around what will come from the third plenum. The people that I've been speaking with, there's a couple great interviews online. Andrew Swan from GLG Man comes to mind yesterday saying, you know, don't expect huge stimulus coming from the plenum. You're looking for more structural reforms, but still on any hopes of stimulus, we saw it yesterday, helps to drive these share prices higher.
Yeah, such a conundrum for them to try and stimulate, but at the same time they have that huge debt problem as well. Now, when it comes to consumers here, we're still gloomy. Consumer Crunch, the ANZ weekly economic survey, at its weakest level, I think, since December, down by about 0.5 point. Confidence 36 points lower than it was pre-COVID. I was talking to Maddie Dunk from ANZ. You can find that up online. The other interesting point that she made, and it kind of goes through into what Stephen Halmarick from CBA was saying to you too, though, they are actually seeing households start to save quite a lot more.
Well, interesting. And again, that interview with the chief economist of CBA will be up online shortly, ausbiz.com.au. But what it means, though, because we are pulling back on our spending, our discretionary spending, although we're having to still spend up big for essentials like insurance and everything, it means that the RBA will be reading that as potentially a reason to stay on hold or even cut. Because as Stephen said, you know, interest rates is such a blunt instrument, and it's going to be hurting the same cohort, you know, renters, young people, way more than it would be hurting those that are still booking holidays and such. So really, really interesting point that we find ourselves at in the Australian economy.
All right, let's have a look at the sectors today. We mentioned the miners weighing us down today. Rio Tinto, they're off 2.4% on the close. But look, Fortescue still looking good, a little bit of a pop. I think we saw iron ore futures rise, underpinned, of course, by, as you mentioned, these hopes of stimulus from China.
All right, other sectors to keep an eye on, retail. Retail coming under a bit of pressure, generally speaking, although Premier Investments up by 0.8%. My 12-year-old on school holidays went to the mall today. She didn't buy anything though.
I used to get $20 to spend. I think that would go nowhere
I gave her $20 and she came home and said everyone else had 50. She was just buying lunch.
Yeah, true. But now you think of transport costs. Anyway, all right, the banks as well, speaking of where that $20 comes from. CBA coming off, but of course has been hitting those records, and some of the others have been hitting highs as well, and they all looked pretty solid today.
Pretty mixed though for the sectors today, 6 of 11 lower. A-REIT's actually the best performing sector. We sort of mentioned the Rio Tinto production results, 157.4 to be exact, million tons of iron ore for the first half.
I think that we might have the potential London listed stock there, because of course we saw the ASX listed stock down by about 2.4%, and it's well above $100. Compumetics there as well. We talked about Hub24. I spoke to the CEO, posting record net inflow of $5 billion in the fourth quarter. And I think there might be something wrong with our graphics there.
I just think that might be human error. I'm not sure what's going on. Let's leave those there because I don't like having potentially wrong data on the screen, and we'll get to our guest in studio. Welcome to the COB. It's a Tuesday. Martin Crabb, CIO from Shaw and Partners. How are you?
I'm not too bad.
Yeah? I'm staying warm, warm. Happy this market seems to be holding above 8,000?
Yeah, it's been defying gravity in a lot of ways. Just interesting seeing the banks there. I think 5 of the banks hit a 52-week high today, so CommBank not one of them for a change, but that's certainly the thematic that we've seen. We've just seen the whole banking sector grind higher, and that is obviously 20-25% of our market, and that's just dragged everything higher. The materials seem to be coming under a little bit of pressure just because the China data yesterday was a little bit weaker than expected, and some stimulus from the plenum. Hard to see the materials sector driving us forward. So it's just really those interest rate sensitive, not being driven by the rates outlook in Australia, because that's still a little bit uncertain, but more of just the offshore. Jerome Powell's interview overnight with the Washington Club just reaffirmed that the next move's down, and they even probably put July back on the table. The futures are not really pricing much for a July rate cut by the Fed, but the markets would certainly like that. So I think the REITs, the banks, all those interest rate sensitives just driving the market higher.
What about the Trump trade? I mean, obviously that's been in focus since the assassination attempt. A lot of people out there, obviously Sportsbet, William Hill saying, look, his chances of winning are even greater now. So you have seen this flight to a lot of sectors and stocks that you think could benefit. Yeah. But we had two guests on today. Steve Sosnick saying, look, 3.5 months is a long time in politics. Henry Jennings kind of said a similar thing. Yeah. How are you sort of viewing that?
Yeah, I mean, I think we've been in the Trump, work out what a Trump presidency means for your portfolio since the start of the year. Really was, the polls sort of move around a bit, but most people said that momentum was certainly with Donald Trump, and that's continued. And people have just drawn the parallels from the attempted assassination attempt on Ronald Reagan during his campaign, and it boosted his popularity quite significantly. So there's a little bit of that going on. So I think, as you said, 3 months is a long time. In fact, if you go back to the 2016 election, it was almost on the day that people decided Hillary Clinton wasn't going to win, leading up to it. So the polls can be wrong because of the fickle nature of non-compulsory voting.
I still remember that.
They should all be like Australia and have compulsory voting.
No, we'll leave that for another day, Martin. All right. So one thing that whoever is the president of the United States will have to, even if they don't address it in reality, they'll have to make some sort of an attempt, which is government debt levels. It's eye-watering in the United States. And Trump does not, by the way, have form in bringing this down through his first presidency. Yeah,
it was interesting that Jerome Powell said in that interview last night that he thought that both sides of politics were committed to doing something about it. And that is just completely untrue. Neither side of politics have got anything other than increasing spending and cutting taxes. So here's a chart here just looking at, it's not just the US, obviously the US is the biggest economy, but the level of government debt as a percentage of GDP is continuing to rise based on projections, not just in the developed world, which is the red chart there, but also in emerging countries as well, because governments are just spending crazy amounts of money despite the fact that interest rates have gone up. So I think the US interest bill is now over $1 trillion a year. They've got $25 trillion worth of debt, and so the interest on that alone is $1 trillion a year, which is a staggering amount of money. So we've got this really positive emerging story on inflation. It looks like it's coming under control, which means the Federal Reserve and other banks can cut. But long-term bond issuance is massive, right? It's hundreds of billions of dollars. So we might have this falling inflation but higher long-term interest rates, which the market's, I don't think, really thinking about. The market's getting very positive about earnings because inflation's coming down and rates are coming down, but the reality is that the bond issuance is going to keep longer-term interest rates higher, so it's not going to be that positive for markets.
What about our friends in Europe? Pessimistic, you say, for 25 years?
Yeah, I think I put a chart in there on it's called Optimism. It's the European Optimism Index, and it's negative since 2000. So there's never been a period in the last quarter century, there it is, where Europeans have been optimistic at all. They just have varying degrees of pessimism. We use the phrase probably a little bit uncharitably of the whinging POM, because they're always whinging. Europeans are always whinging. It's just a matter of by how much. So I just found it interesting that line has not been above zero since 2001.
Well, I think a lot of that has to do with what football team is winning at any given time, right? My guest
well, the
yesterday
Spanish
was
just won
upset.
the Euros, so
yeah. Well, anyways. Can't, as I said, contribute to that conversation much more than that, but I am interested on your views when it comes to this quarterly earnings season in the United States, because slowing economy, perhaps margin pressure, we want to know what they say about the consumers. but there seems to be relative optimism about it still.
Yeah, I mean the surprise indexes, or the indices that look at whether economic news is coming in hotter or colder than expected, they've been negative for most of this year, whether it's Citi or Bloomberg. So there it is there. So we've had economic surprises. The data's coming in softer and softer and softer, and yet people are upgrading earnings. So we're now looking at, I think, for this earnings season, double-digit earnings growth. For the 12 months to the end of the calendar year, 12.5%, 13% EPS growth. And then also into next year, 12 or 13% EPS growth. And it's not just big tech, although big tech is driving a lot of it. It's right across the economy. So we're seeing most sectors of the market with double-digit earnings growth this year and next year, despite the fact that everyone's reducing GDP growth estimates and economic data is coming in softer. So there does seem to be a disconnect between the top down and the bottom up.
We wanted to quickly ask you about DroneShield as well, big mover today.
Yeah, well, it's a stock that Shaw and Partners covers, and it's up, I think it's up 270% for the year, or 350% or something for the year. So a lot of the movement today, I think, triggered by a news story on the wires, which just, I suppose, look at the bear case and the fact that the stock's run so hard, but it just shows how volatile the market is. It always feels like a meme stock in the way that the company's moved. So I think it got a speeding ticket from the ASX. There was something like 60 million shares traded when I left the office, and the stock was down somewhere around 25 or 30%. But that needs to be put in the context of the fact that it's shot up from very low levels at the start of the year to, I think it got to $2.70 yesterday or the day before. So just shows there's a lot of very hot money in the market when you see movements like that.
Well, we'll give a shout out to our mates at Capital Brief. I think it's the article that did inspire some of the selling. 12 months ago, DroneShield was worth $150 million. Today, it's valued at $2 billion. And a lot of that came from geopolitical risks, them selling to the US Department of Defense. They put out a lot of announcements. And so Capital Brief saying short sellers are circling as it nears that wild $2 billion market cap. But yeah, closed down by about 22% today. Okay, so everything that we've talked about though, Martin, I mean, if you have been thinking about the Trump trade since the beginning of the year, if we are looking at earnings expectations, how are you positioning portfolios? I was speaking with a guest just a little while ago who was saying, you need to be trimming, potentially taking some profits if you are holding the banks, if you're holding those big US mega caps. Yeah,
it's interesting. I mean, we're fully invested, and we've been fully invested for the entire year. We're overweight for probably the first 3 or 4 months, Nadine. And at the end of April, we sort of just, when the market ran really hard, we pulled back to a neutral position. But we're telling people to be fully invested. Don't be sitting on the sidelines. There's still money to be made, but it's all about sector rotation for us. So our global managers have been playing the tech space quite well. But now that it's apparent that the US is going to cut rates, because most of this year it's been, well, when are they ever going to do it? That we need to get a bit more cyclical exposure into the portfolio. So globally, you're seeing people rotate out of tech and software more into cyclicals, industrials, and financials, and we're starting to see that globally. Domestically, it's like we still think the RBA hikes, and we don't think the market's priced for that. So we're avoiding banks. We're avoiding, not like completely out, but we're just underweight banks and domestic retailers. So we're still quite interesting. Globally, we're getting a bit more cyclical, whereas domestically we're staying short cyclicals.
Jeez.
So, because I think the path of interest rates is completely different when you go from the US to Australia. Australia's going to be tightening, US is going to be easing, and the economy here is much stronger than it is in America.
So I can't let it go, but why, what is your case for a hike?
The inflation's still too high. I think you had a guest on earlier from the Commonwealth Bank who talked about their spending. They're still seeing spending growing. I mean, spending should be coming down. It's still growing. People are still spending money. And even though they're bearish, like all the consumer optimism numbers are all terrible, they're at recession levels, people are still spending money. So the economy's still too strong. There's government tax cuts coming in. There's spending stimulus coming in. There's minimum wage rises that are starting to kick in. There's still a lot of heat in this economy, and it's pushing inflation up, not down. And I think the RBA don't have much choice. They get an inflation rate over 1 at the end of the month, they're going to hike 25 bips.
Oof. All right, hope you're wrong, Martin.
So do I.
You are always often right. Martin Crabb, thank you. Martin Crabb
thank you.
From Shaw and Partners. All right, well, we talked about Rio, of course, and that was the stock of the day today on the call. We heard from Rudy Philippak-Van Dijk and Philip Pepe, who both see a buy opportunity.
Obvious statement to make is I don't think there's anyone on this planet who doubts that the price of copper will be higher in years to come. This is one of the copper players. Not pure, but still one of the exposures you can get. There's still a high dividend there. Share price is not excessively high if commodity prices stay up or go higher.
I think it's a buy. I mean, I know. I mean, the quarterly was a slight miss, 2%, a rounding error. Solid exposure to iron ore, solid exposure to copper. I agree, copper, $10,000 a tonne, probably not falling anytime soon. Iron ore's been fascinating. Analysts have been calling it below $100 a tonne for over a year now. It's around $110 today. China has really slowed, but the iron ore price is still pretty solid. So
all right, let's have a look at the leaders on a day when we closed a little lower. Lifestyle Communities looking good with a 6% gain.
So
Iris.
yesterday it was really battered. So that's the story. So it was the subject of an ABC report about them not treating people very well, their clients very well. So a little bit of, I guess just give back today, but still not recouping all of yesterday's losses.
Okay, let's have a look at some of the laggards then in the space today. Metcash, of course, we touched on going ex-div. It did look like there was a bit of a switch out of some of these gold and other resource players, Bellevue and Sandfire in particular. I don't know what the news was around Immutep, do you?
No, I actually don't see that on my list. So there you go. And Bellevue Gold is one of those companies that did come out with production updates yesterday, and today its price target cut by Goldman Sachs. So we'll keep our eye on those in the resources space for you over the next little while. Look, I don't know the story behind many of these here in the small to mid cap space, but some good gains being seen there for Diatreme Resources, which I've never heard of before, up by close to 18%.
I will look at the laggards while you find out what that stock is. Encounter Resources down 21%, FBR off 19%, Macro Metals down 16%, Aspire Mining down 12%, and Clearview Technology off by 11%.
Okay, so I still don't know exactly what it does, but it has had MLM buying a substantial stake in the company. So there you go. Metallica Minerals, I guess, is MLM. We like to close the loops here. And when I'm thinking of that, if you're listening to this in podcast form and you hear Martin Crabb talking about his charts, because he does bring us charts every week, and some of them he's created himself, you're really doing yourself a disservice by not clicking on ausbiz.com.au and watching the COB. Although, to be honest, I don't really care how you consume the content.
I love the podcast. I listen to it on the way home. All right, let's have a look at what is happening overnight. US retail sales, the NHB Housing Market Index, some data out of Canada as well on inflation, and also that ZEW economic sentiment, which really just points to Martin's point, I guess, about how there is a lot of pessimism in Europe. And a lot of earnings, as we touched on with Martin as well. So the banks, Morgan Stanley, Bank of America, we've got Charles Schwab, State Street, all coming through with numbers. Yeah,
one of the more exciting ones, I think, a little bit later in the week in terms of U.S. earnings will be Netflix, to find out how things are going there. We like our U.S. quarterly earnings, and in the morning, 9:45, oftentimes we'll be covering them for you on ausbiz.com.au, and you can find all those interviews online as well at your own time. It's been quite quiet here locally in terms of economic data this week, but we will hear from the head of economic research at the RBA on building activity here locally.
Yeah, and also UK June CPI, that will be much later in the evening. BHP quarterly results, and New Zealand coming through with second quarter GDP tomorrow.
Yeah, those are production quarterlies coming from BHP. All right, shall we see how this market closed? We know that the CIBO Australia market closed down by 0.25%, as did the S&P ASX 200, just closing below that 8,000 level. 7,999 is what I've got.
Okay, I need to refresh because I'm seeing it still at 8,002. But yeah, I think you're right. Okay, mine is not refreshing enough. Well, there we go. Either way, just on that marker.
Yeah, and E-minis, worthwhile just noting that they are both higher, NASDAQ and S&P 500 E-minis. And as we look toward this European session, well, Trump will still remain very much in focus. He's stepped into that Republican convention. He's nominated his VP. And of course, we'll be listening for anything coming from China dragging on Asian equities today.
And on that point, I wrote the View today about the Trump trade and what a lot of our guests have said. So there's links through that in the newsletter as well to their interviews if you're interested. Of course, we were talking about the fact that they say a week is a long time in politics. You've got 3.5 months here. So does the Trump trade, or this betting of a 73% likelihood of President Trump again occur when we're in July now? November is still 3.5 months away.
It's really anyone's guess, but looking pretty strong right now. All right, we will love you and leave you. Hope you have a good night. Stay warm wherever you are, and we look forward to seeing you in the morning.